All right. Welcome, traders, to the 58th edition of our weekly market breakdowns. So without wasting any time, the first pair that we're going to look at this week is GBPAUD. So as you can see right here on the weekly, we're in a long-term downtrend. Here's our most significant high. And then we have our swing high right here. And then the market recently broke this low. So this trend is still definitely in continuation, right? And within that swing, you can see that there's a trend that formed within that swing. So the market dropped, formed a correction right here, right? And recently broke structure, meaning it plans to continue towards the downside. Now, if we zoom out, you can see that we have a large fair value gap right here and an area of liquidity in the form of this low over here. And so our nearest take profit or our nearest target will be the source of that fair value gap. Yeah, so I think it's pretty straightforward. The market is about to drop because it has incentive to fill in this gap over here. And like I mentioned last week, if you want to identify where the market is most likely going to go, the first thing that you have to identify is your trend, overall trend. Second thing, you have to identify where your fair value gaps are. Third thing, you have to identify your potential areas of liquidity. So I believe that the market will eventually break through this price zone right here. But for now, this is all we have, right? Now, if we look at current price action, we have this weekly high, previous weekly high, as our area of liquidity. And then we have this previous weekly low as our area of liquidity, right? Previous weekly low. So what I'm waiting for is for the market to break through the previous weekly low with a closed candlestick, right? A strong bearish breakout from this weekly low will be confirmation, because even though we closed with a rejection, the market still closed net bullish. So if we can get a straight breakout below this low, then it will be confirmation to go towards the downside, right? Other than that, above the previous weekly high, there are no fair value gaps. So the market does not necessarily have incentive to go towards the upside. So yeah, that's what I'm seeing. Let's go to the daily right now. As you can see right here, before the market formed this high right here, we had this zone over here, which is not really a good zone, but the market used it. Now, the zone is very important, right? Because if you can look at this, the market took liquidity from this high, tapped into the zone, and then rejected, right? Now, we have this sort of induction going into the zone, and then a drop. Now, one of two things can happen. Either the market will print another induction in order to take out last week's liquidity, right? And potentially aim higher and then drop. Or like I said, we need to anticipate a breakout from this weekly low and a pullback, and then we can sell, right? So if you adjust this like this, this is where you could potentially get an entry. So I'm gonna place a stop, a limit order. First limit order will be here, right? And then take profit will be here. Or the second thing I'm gonna do is I'm gonna wait for the market to break below this point right here, and then and then sell, right? Another point of interest is this low over here, because if the market is able to break below these equal lows over here, then it's a definite confirmation. So if you want to be conservative, wait for the market to break below the zone over here. right? But anyways, these are my thoughts on GBPAUD. Let's move on to another pair. All right, another pair that we're going to look at this week is NZDCHF. Now, as you can see from this point over here, the market has been dropping, right? Has been dropping towards the downside. As you can see, we have consecutive lower highs and consecutive lower lows. And the market is reaching for this area of liquidity over here because there is no fair value gap here, right? So obviously, because there is no fair value gap, it means that there are no orders that are underlying. Therefore, if price is strong enough to continue pushing towards the higher side, it has the utmost advantage. It has an advantage to be able to eventually break through all of these zones, right? Because what you need to understand is that a fair value gap, depending on the strength of the fair value gap, act as a barrier. And so price has to be strong. There has to be enough orders for the market to be able to break through it. An example that I can think of is this fair value gap right here. So you had a strong fair value gap and the market went up, right? Hit the zone, right? After hitting the zone, price dropped. Now, price had to gather enough orders to be able to break through this fair value gap eventually, right? But as you can see, price was not able to break through the zone right here with ease, because then again, the size of the fair value gap dictates the strength of that zone, right? And so if price is moving in a direction with a strong force and there is no fair value gap to resist that movement, price is most likely going to break through those zones or through those price levels. I hope that makes sense. Anyways, price is dropping, right? And as you can see right here, we recently had a break of structure here. And then we have this kind of like a gap, and we have a potential supply zone here. Now, what I'm waiting for, especially next week, is for price to drop and then reject and maybe close net bullish in order for the zone to be confirmed, right? Remember, I think I spoke about this in length in a video that I dropped on identifying valid supply and demand levels. I'll put the link to it right now. But like one of the things that will lead to a zone being confirmed is whether or not it's able to break through an opposing structure, an opposing zone. And also you have to see one candlestick, at least one candlestick consolidating away from that zone, right? And so now you have this previous weekly low right here, which is the potential area of liquidity. So I would like to see the market taking liquidity from the zone, right? So an induction taking liquidity from the zone, and then a midweek reversal. If that does not happen, it means the zone is not confirmed, right? Unless the market does not close above this high, this previous weekly high, right? So yeah, if we go to the lower time frames, okay, we have incentive right here. So what I want the market to do is to take out these equal lows right here. I think they will be more clear on the 4 hour. So at least take out these equal lows right here. And then you can have incentive to go towards the upside. And then where will I place my limit order? First one will be placed here. And then the second one will be placed above, slightly above that one, which is right here. And so, yeah, provided that zone has to be confirmed. I have to emphasize this, right? Like I said, another limit order will be placed somewhere here. And what about my take profit? My take profit is far, somewhere here. As you can see, all of them offer good risk to reward ratios, right? But yeah, let's move on to another pair. All right. This is an update on a USDCHF. I'm not going to spend too much time on this pair. As you can see, I watched this setup on my own, so I didn't post an update on this last week. But basically, what I was expecting is the market to take liquidity from the previous weekly low, which it did. And as you can see, it closed net bullish. And so what I'm looking for in the coming week is for the market to break above that hammer. My take profit is still here. And let's go to the lower time frame. So now, as you can see, the market is trying to break past that point. I think the market might take liquidity from the lows before moving up, or the market can just straight up shoot towards the upside. Trying to see if there's a trend line breakout. So as you can see right here, first touch, second touch, we had a breakout right here, went back to retest. So the more riskier approach is just to place your entry. Just place the entry. And then the first take profit will be here. The second one will be here. It's advisable to wait for the breakout. That way you can get a more favorable risk to reward, right? But yeah, at the end of the day, this thing has incentive to go higher. And yeah, that's what I wanted to show you guys, right? Let's move on to another pair. All right, so the final pair on our watch list is EURGBP. And if you remember, I think it was 2-3 weeks ago, we looked at it and we were expecting the market to break past this point. That was our POI. And so as you can see right here, the market has indeed broken past that structure. So now it means the uptrend is now confirmed, right? What I'm expecting now is for Monday to take out this liquidity, Monday and Tuesday to take out this previous daily high, take out this liquidity, and then print an induction towards the upside. After printing an induction, a reversal, right? That will close net bearish. After printing that bearish candlestick, I'm expecting the market to go back into the zone right here and then move up. So there are two potential levels where the market can reverse. The first one being this one. All right, so let me draw the model of the candlestick that I expect right here. Reference purpose. This is for me. This is for me. This is not for you. This is for me. So that I remember, because sometimes I tend to forget what I'm looking for. So, right. So, like I said, the first area where I'm expecting to buy is this one. Now, this one is not high probability. Why? Because it's not nested within a higher time frame zone, and also there is a fair value gap right here, right, and another one here. So the market has incentive to at least drop to the zone here, right, or at least this one right here. So the second entry for me will be the zone here. Sometimes, like we've seen on USD about 2 weeks ago, the market sometimes does not go directly to the nested zone. Sometimes it reverses from the source of the fair value gap, which is this right here, this price range over here. So that's why I wanted to place my zone there, but it's not a zone. It's not a demand zone. So meaning the first one will be here. Now I'm just rambling. First one will be here, and then the second point will be here, and then this will be Where will our take profits be? Let's look on the weekly. We have a zone here, but it's not strong enough. I think here. Right? When we look at the weekly, price has incentive to go to this fair value gap right here, and this is the source of that fair value gap, the zone right here. So price can either reverse from this zone, right, or this one right here. But yeah, it looks decent, and this is what patience does, guys. If you are patient, you are able to get or you're in a position where you can get high quality trades. And so sometimes it's not about being active. Sometimes it's just about awareness, being aware of a setup, waiting for it to happen, right? And then joining in. Because we could have entered somewhere here or here, but I chose not to because I had to wait for confirmation. If you have confirmation, we're in a much better position to get a high probability trade. But yeah, enough talking. This is all I have for you guys this week. And please check out the video that I just dropped on the law of diminishing returns. If you enjoy the kind of conversations that I have on the other series, which is the trader mindset series, please engage with it so that I know, right? So that I can tell from the feedback if you guys really want to see that type of content. But yeah, this is all I have for you guys. Till we meet again in another video. Peace.